Well, heading into this year, many economists and analysts thought we could see 2 to 3 interest rate cuts this year, but halfway into 2024, and the Federal Reserve has not budged. The June Ag Economist Monthly Monitor, just released this week, asked economists how many rate cuts, if any, we will see this year. 73% said 1, 18% think 2 rate cuts are likely, and 9% say 0. While inflation and higher for longer interest rates are hitting some industries within agriculture especially hard. So is the ag economy heading toward a recession? I had the chance to talk one-on-one with the head of the Chicago Federal Reserve last week, and while he couldn't tell me how many rate cuts we will see this year, he says there are some warning signs they're watching when it comes to agriculture. And that's this week's Farm Journal report.
Today, the FOMC decided to leave our policy interest rate unchanged and to continue to reduce our securities holdings.
Just last week, the Federal Reserve stayed the course, leaving interest rates unchanged. The news didn't come as a surprise to many, as taming sticky inflation has proved to be a challenge, despite promising inflation data also out last week.
Inflation has eased substantially from a peak of 7% to 2.7%, but is still too high.
On the heels of the Fed's announcement last week, I had the chance to speak one-on-one with Austan Goolsbee, President and Chief Executive Officer of the Federal Reserve Bank of Chicago. That was during the Iowa Farm Bureau's Economic Summit. He wouldn't tie the Fed's hands on how many rate cuts we could see this year, but he says they are making some headway on taming inflation.
We got excellent news, at least for 1 month, on inflation for this month. That inflation really, at least for a month, was coming in right around the target of where we want it to be. But that follows on failures on inflation, so we have to make progress on inflation before you're going to see rates coming down to something like normal levels.
Goolsbee told me he doesn't see inflation going back to levels pre-pandemic. So what's driving it? Well, that's also complicated.
There's 2 parts of the inflation, and one is it just got way too high. And then the second is it's proved more persistent and stickier than what we thought. I think a big component, and you see that in the ag economy here in Iowa, has been input costs and the supply side damage. Some of it came from COVID, but that deterioration led to a lot of the inflation, and as that's been healing, that's allowed the inflation rate to come down without a recession.
But the ag economy and the U.S. economy are currently on different paths. Just this month, John Deere announcing layoffs and early retirements, with more job cuts possibly on the way. Last week, Bridgestone America is announcing it's laying off 118 workers at its Des Moines, Iowa plant, citing lower demand for ag tires.
I think the ag economy is a little bit a different story than the general economy. And partly we're readjusting. We just went through 3+ years that were extremely unusual and in many ways very strong for the ag economy. So part of this is getting back onto a more normal set of circumstances, and we're going to have to adjust to that. Part of this, if you look at Deere and durable goods makers, in the strongest years, a lot of farmers bought a lot of equipment, so just the durable goods cycle, there's not as much demand. It's kind of slowed. And for sure, high rates don't make that any easier.
The Chicago Fed also produces an ag letter looking at credit conditions across their geography. And in May, the letter showed that district agricultural credit conditions weakened a bit during the first quarter of 2024. Repayment rates for non-real estate farm loans were lower in January through March period of 2024 compared with a year earlier. And in the first quarter of 2024, demand for non-real estate loans relative to a year ago was up for the second consecutive quarter.
Right now, repayment rates, if you look at delinquencies, they're rising. They're not to levels that you would call a recession, but they're rising. So I think that's an area of vulnerability.
Well, the June Ag Economist's monthly monitor, which I mentioned earlier, asked the nearly 70 economists what are the most positive and negative aspects of the outlook of the ag economy. Geopolitics, as well as Chinese demand were some of the negatives. U.S. trade policy and current export outlook, those were all headwinds that economists mentioned. But as for the positive, adverse world weather boosting U.S. exports, strong financial balance sheets at the farm level, and farmers eager to adapt to stay in business, those top the list. Well, speaking of exports, Mexico could become the United States' top trading partner this year, beating out China. A glimpse of ag around the world is next.